Back in 2020, I started my trading journey, and I started my journey because I lost all my money to a crypto scam. As I started the journey, a COVID crash happened. Bitcoin went to close to $4,000, and I was sitting with only a couple $100. I had no job, I had no backing. And even though that period was really hard, I decided to stick it through. And I tried everything when it came to trading. But eventually I got to a point where I needed to live. I needed to make a certain amount of money a day. And that's when I learned a powerful strategy of making $100 a day. Now, in my brain, I thought I was just making $100 a day. What I didn't know is I was starting to crack a code to realize that, whoa, it's a business and there's a system. And the moment that I realized that I can make $100 a day, I soon realized that if I wanted to make $1,000 a day, it was the same recipe. Now, I want to show you guys on this chart over here because I think it's very important, specifically where the market is right now. The market has seen a lot of redness over the last couple of months. When I started my journey, this is where I started it. I started it in this area here, right? And after that, we saw a massive crash in the Bitcoin and altcoin markets. So I had like $2,000-$3,000 to my name, and I ended up getting drained down to a couple $100. And this is where I needed to now start my journey. Now, in this time, I tried to do everything that I can, right? I tried max leverage, I tried staying up all night, I tried to do everything, okay? And then I got to desperation part where I needed to live. I had no more backing in life. I was gonna lose everything that I had. So I needed to just make daily bread. And this is the moment where it clicked for me. After multiple weeks of struggling, this is where it clicked, and I started my journey of consistently making $100 a day. Soon after that, I started to see that, whoa, I was making $1,000 every 10 to 20 days. And then I was making $2,000 to $3,000 every 10 to 20 days. And eventually I was making $10,000 a month. And it was the same recipe. So what I'm about to share to you in this video are the 6 key pillars that can generate you $100 a day. Now, when you're done this video, you're gonna be able to take all this information and actually start building your strategy. Now, the platform that I'm using today is an exchange called Bybit. Now, Bybit for me has all the tools that I need to complete this strategy. They have many tokens that have good volume. They have a very simple user base, which is very important. They have a powerful mobile app. And if I am not on the computer, I can monitor the trades on my phone. And then they have something very powerful, is you can change your leverage when you're in isolated mode. And this gives you more liquidity when you need it. And I'll explain this a little bit later in the video, but it's a big game changer. So before we go straight into it, if you guys do not have a Bybit account, there's a link below in the description. By using this link, you get sign-up bonuses as well as joining my free community. Once you've clicked on that link, you're going to put in your email and your password, and you're going to open up an account. If you are stuck with any of this, we do have a Bybit tutorial in the description if you want to know how to fully use everything in Bybit. Now let's start our 6 pillars. For me, it was so important that in the beginning, I thought I needed to know everything. But the moment that I knew that it's just certain categories that I need to know, it's very important that I keep everything nice and simple, and then I can actually spend time trading versus trying to learn all the time. So the first pillar that I want to teach you guys is creating yourself a checklist. Now, it's very important that you can build all of this strategy, but you need to be able to actually enter trades. So I use TA and I use charting as my way to enter the markets. But then what you have to do is create yourself a checklist. Now, this checklist is built around things you really need to think about when you're entering trades. The first one is your risk to reward. Is your risk low and is your reward nice and big? You don't want to trade for a 1-to-1 risk to reward ratio. That's basically gambling. When it comes to trading, if your wins are worth a lot more than your losses, you can take 2-3 losses, but 1 win will put you into the profits. So the whole key here is to focus on a really good risk to reward when it comes to choosing your checklist. So risk to reward is super important. Then the next one that's important is knowing out of these tools, where do I put a stop loss and where do I put a take profit? Stop loss is there to protect you if you get things wrong. So if you get it wrong, get me out so I don't take too much of a loss because I was wrong. And then you have to take profit that if I was right, where are we going to take the money off the table, right? So make sure that these components help you identify where do I actually put a good stop loss as well as a good take profit point. The third component is actually getting into the trade when it's ready. So the first thing is when I'm looking to buy, I want to see that the token has come down. I want to buy red, right? And when I'm looking to short or sell, I want to sell that into the green. It's a different mentality, but that's when your risk is the lowest because you are going against the wave. Therefore, if you're correct, the reward's a lot bigger than the loss. Now, there's 2 ways this kind of works. Sometimes the token's pulling down aggressive and you're looking to buy the dip. Other times it comes down and it settles. And then you want to catch the moment that it's going out of settling into trending again. So when you're choosing these components, you're either looking for when a market or token has settled when you're looking for entries, or you are looking for approaches of when it's been pulling back, looking for buys, or when it's been pumping shopping, looking for sells or shorts. And then the fourth component is the timing. I'm going to show you guys a tool that I use that helps me know when the trade is too early. Don't enter now because the trade's going to take your money. It's going to chop around for a bit. And it came down to the part that I just said previously of the settling part. Usually chart has to settle before it starts to move again. So for me, not getting into the trade too early is super important. Now let me show you guys my checklist and the tools that I use. Now again, you can use any TA tools as long as you're hitting the core fundamentals of what you're building this checklist around. So the way mine works looks like this, right? I use 5 simple tools. The first one I use is Fibonacci's, right? Fibonacci helps me know that a pullback is healthy and that if it bounces here, it's still healthy in the direction that I want it to go. So Fibonacci is important number 1 for me. Then I want to see that there is horizontal support, right? When it comes to the Fibonacci level that I'm looking for. Now, Fibonacci has many different numbers, right? It has many different lines, but to eliminate those lines, I add in supports and horizontals. And when I do that, it then removes many of the lines because not all of them have previous highs or lows nearby. So now this gives me point number 2. This is an area of where I want to see the token bounce. Number 3 is the trend line, right? The trend line helps me know is the timing correct for the trade. Because if we are now dropping into this area, and I'll do a quick drawing here, and we're going to trickle around, yes, this could be the bounce zone, but I need to make sure, right? And the trend line says, hey, if we break the trend, it's correct. So rather wait for the trend to break so that you know that you don't jump into the token too early in case it wants to do that, right? So the trend for me is the third one that I want to see tick the box, right? The fourth one is when it bounced, I want to see that it came from an oversold territory, that we have had a pullback down. And now from this area over here that we're going up, I want to see we're coming from the bottom. I don't want to see that we're in the middle coming down or we're at the top. I want to see that we're coming from the bottom to the upside, meaning that we're going from oversold into overbought, right? That's the mentality. And then the fifth tool that I use is the risk to reward tool, knowing that if I buy here or I buy the breaker trend, right, my stop loss goes below. So if I buy the breaker trend over there, my stop loss goes below over here. Now, where do I want to put my take profit? I use a very simple methodology here. I use the mid range. So what that basically means is wherever a token has fallen and I'm looking to buy, in the middle of where it previously fell is where I take profits. Why I do this? It's one of the most consistent take profit areas, right? So for example, when this fell and it went up, it went to the middle, right? When this fell, when it went up, it went past the middle, right? So if we break here to the middle, and you can go back and see many times that even when we went up and we came down to the middle, right? When we dropped, we went up to the middle. So for me, when I'm looking at a buy area or zone, I'm looking to put my risk to reward tool here, understand the stop, understand the middle of the range, and make sure that my risk to reward is a good ratio. I'll explain this a little bit later on in the video. Now let's jump onto pillar number 2. Now this is where we're going to speak around position sizing. We're going to speak around using leverage and also understanding liquidations. So let's jump straight into it. So if I go here to the Bybit platform, I'll go here to the dashboard just to show you where to go. So you click on here and you go down to futures. Now futures is leverage. Yes, this is a riskier part of trading as there are liquidations. And that's why for me, stop losses are super important. But at the same point, leverage is what changed my entire life. It allowed me to trade with so much more money than what I actually have. Therefore, when the big moves happened, it really made a difference for me. So for me, yes, it is more riskier. That's why you're using smaller amounts and you're always putting stop losses. But secondly, it gives you the power of growing money very quickly. So when you're in the platform over here, you got the token, you got the chart, you got the order books. But then I want to come to this section over here. So the first one, guys, is to make sure which mode you are on. You got cross and you got isolated. To make it very simple, cross is when I'm trading a one token strategy, okay? Because what it does is it combines any money. So whatever money you have in the account, okay, whatever you put into the trade, if the trade goes incorrect and you don't have a stop loss, it will start taking from this money, right? So basically means that, hey, you can wipe everything here by using cross, okay? At the same point though, on the pro side, is when the token goes into profits, you can use some of that money to make the position bigger. But this is a little bit more advanced, all depends on your journey. But cross I use on a single token strategy, me personally, but the best one by far is isolated. Isolated means whatever trade you open now will not be affected. It won't affect this money. It won't affect any other trades. It won't affect anything outside of that trade. It keeps it isolated. Therefore, if you trade multiple coins and one goes south, it won't affect the rest of it. So isolated is a really good way to trade. Plus that tool I spoke about earlier is why I think isolated is brilliant on Bybit. Now let's jump to that section over here. So on the right-hand side is your leverage. This is where you are you're going to trade leverage. Now, many people will ask me, how much leverage should I trade on? For me, the leverage gets determined off of the trade setup, right? I can trade any amounts of leverage. It more comes down to how much money am I actually looking to risk. But let me show you what this basically looks like. So I have $223 in the account. If I put it on a 10x and I decide to get into the token now, okay, I can trade up to $2,000, right? $2,200 to be exact. So just off of my $223 and I trade a 10x, I can trade a 10 times more money than what I got. So what the leverage means is it times whatever your collateral is to the size that you can trade. Now, where the downside comes into play is to say, hey, we will give you this money, but if it goes incorrect and the trade goes far enough that your collateral runs out, we are going to liquidate the account. Okay, so when you do look to enter a trade, and I'll enter a small trade to show you guys here. Okay, so let's enter a trade. Here's a position. I entered on a 10x. You can see it gives a liquidation price. That is basically saying that we are borrowing you this money, but if you get it incorrect to this amount here, we are going to liquidate the account. Okay, so liquidations are very important. It gets calculated when you're looking to open up the positions. Okay, but it's very important to know that liquidations are real. So the more money you borrow, the more liquidations you're going to find. So again, just coming and trading with high leverage with no strategy is very dangerous, but there is a safer way to do it, specifically when you have a great trading setup. So just to show you guys around again, chart, token, mode, where to select your leverage, right? These are two ways you can get in and out of the market. The limit is if you want to buy something that hasn't happened yet, right? So if you think price is going to go down at 62,000, it's going to go down to 59,000, you can put a limit order over there. You won't buy it now, but if price goes there and there's another person in the book to do the transaction, your trade will then open up, right? So it's a great way for you to kind of be patient for trades. Then you have markets, which is a great way to get in and out of a token, right? Quickly. This will buy from anyone in the book now and get me into the trade right now. So I use this on breaker trend lines. I use this if I'm buying Fibonacci's and horizontals. And this is where at the bottom here, you have your long and short, and this important button, which is your stop loss and your take profits. You can set these numbers in right before you've opened up the trade. Now we go to pillar number 3, which is your cost per trade. Now this is very important. I want to, let's say, make $100 a day. Let's say I have $200 as an example. Now again, $200 is a little bit low for me. I prefer a little bit bigger size of account, but I'm going to use $200 as an example. So if I say, okay, I need to make $100 off of $200, and I need to think of a risk to reward ratio. When you're looking to open up a trade, you need to think risk to reward. So going back over here, when I say that I want to enter, let's say this trade, right, my risk to reward was a 1 to a 3, right? Which means that I need to risk $33 to make $100 if I'm using a 1 to 3 risk to reward ratio, right? If I can find a setup that gives me a 1 to a 4 ratio, then I need to risk $25. 1 to a 5 is $20, right? So your risk rewards are quite important. Now, anyone will say, oh, but I want a 1 to 5. This takes a little bit more patience. You will get them once or twice a day, okay, but you really have to be patient and you can't miss the trade. But then if you look at 1 to 3 risk to reward trades, these will come a little bit more often in the day. So for me, I'm going to use an example now of risking $33. $33 as my cost per trade, which means that every trade that I enter can cost me $33. And if I win the trade, right, I will make $100 to $110. And that's the target that I'm looking for. So now I want to show you guys how we chart and actually build up a trade, right? So the first thing, I'm going to use an example like this trade is ready. So I've broken the trend. I am now on support, right? If I look at a short time frame here, we've also hit a strong Fibonacci. So let's say my 3 out of 4 points are saying I can take this trade. First question I ask myself is I say, okay, I want to put a stop loss right under this low over here. Right, the second part is where am I going to put my take profit? I always spoke around the mid-range. Right? So the mid-range for me is a big point of where to be putting a take profit point. Right? So if I look at my risk to reward tool and I click this in here, right, this is where my risk will be, okay, and this will be my reward. And as you can see, it's a 1 to 4 ratio. Now what I do is I have my capital here, okay, and I go here and I say, okay, the leverage is very important now, right? But I don't have to decide what's the leverage. I have my cost per trade, okay? So if I put in the 10x as an example and I say, okay, I'm gonna now put a 10x and I'm gonna put my stop loss and my take profit points in here, right? And then what it's gonna do, it's gonna say, okay, if you 10x your money right now, you're gonna get to trade with $2,000 worth, right? And if you take this specific trade, if the trade goes against you, you're gonna have a $2.7 loss, right? And you're gonna win $12. Now, what's my target for the day, right? My cost per trade that I've set is $33, okay? And if I look at my reward that I'm looking for, I'm looking for $100. Therefore, if I look at this now and I say, okay, this means I need to trade with higher leverage. The main thing with leverage is people just think, oh, I just select it. Leverage gives you ability to trade more capital than what you need, right? So if you only need, or you can only trade a 0.5% now, to trade on a 3x may not give you the size that you need to make the trade, okay? But as long as you control your losses, you can use the exchange's liquidity to build the sizes that you need. So now I build it up and I say, okay, what does it mean now? And it's telling me here that if I take this trade, I'll lose $6 or $7, okay, but I'll make $30. Whoa, okay, so now we go up, right? And as you can see here on this trade, $57, right, as my take profit, and $16. Okay, now we say, okay, let's bring this up now, right? Again, this is a pure example of how leverage gets calculated on your actual setup. Now, if we look at this, I'll make $83 on a 75x and I'll lose $25. What's my maximum risk, right? It's around $30. Now, remember, right, you do have fees. Fees can add up a little bit. So I always add that little bit more. So for me, 75, I'll probably look at 80. Now, again, guys, just going to ATX is crazy, right? But if you build a setup, and again, this is on Bitcoin, and I got something important to explain to you in the next pillar, okay? But if you look at this, I'm on a short time frame. It's a scalping trade, okay? So it's very small moves we're looking for, and it's a slower asset. Now I look at 80, and now I'm looking at $90 to $94, and I'm looking at $23 to $24 of risk. I can now enter the trade, okay, and my trade is now set. Okay, so again, you're the one that calculates your risk to reward. Off your risk to reward helps you understand your cost per trade. And then you can look for the setup that lines up, and you can see the leverage is determined, right, on your cost per trade. What is the maximum you want to lose? Now, if you have $200 as an example, this is why I said I would prefer $400. $400 is a little bit easier, a little bit more size. I don't have to trade as high leverage. $200, right, I can trade with bigger amounts, but the goal is to grow the accounts so that you don't have to do as much. But end of the day, off of $200, I could build enough size to actually trade for $100 a day. The only downfall is $30 of a loss here. We'll take a small chunk out of this, and I would have to build it up if I do take a loss. Now I want to speak around pillar number 4. And what this is an aggressive and a safety strategy. It helps you choose your tokens. So it's token selection. Now we have Bitcoin, you have altcoins, okay? You even have stocks, you have all different types. Some of them are slower and safer, okay? Some of them are more volatile. Now the volatile ones give you more gains, but they're also more volatile to the downside, right? So I work off a very simple method, and it looks like this over here. And I'm just doing a quick little drawing for you. Think of this as your money, right? And think of your starting point. If you're starting over here and you are starting, I'm going to use $400 as an example. $400 for me is the sweet spot of making $100 a day. It's a good size business that it can be done, okay? And it's something that I did a lot in my journey. Let's say you start on $400 now. Now what I have in the middle here is I'm just going to put an N as a neutral line, right? And then on the top side, I have the aggression. So I'm going to put an A over here. And then on the bottom side, I have the safety, right? Precaution, right? But let's put safety over here. Now what this is your money, right? And it's basically saying you are now starting your journey now, and you're starting at $400. If you decide and you take on a trade or two, you take your money up to $500, $600, okay, you can be slightly a little bit more aggressive because you have a little bit of play, right? You have a little bit of space above your starting capital, which means that the moment that if my first trade goes correct, I can start dipping my toes into altcoins. I can go slightly more risky. Now, am I going to go for the crazy volatile altcoins? No. Can I go for them when I'm up here? Yes, you can start slowly dipping your toes because you have room here. The more volatile assets you trade, the more money you're putting at risk if you get it incorrect. The key here is you're building a business. You need to be responsible as a business owner, right? You just go full blast aggression, you're not building yourself a long sustainable journey here. So the way it works for me is when I go into the aggression pillar, I can trade altcoins. Until then, it is Bitcoin only, right? So if I'm starting my money, I'm starting with the safest asset. So if I lose a little bit and I can get myself back up. I don't go too much into a loss. So anytime I go anywhere into the safety category, may this be at neutral, may it be me down on my account. And by trading Bitcoin, taking small losses, it's teaching me that there's defense and there's attack. It's like a boxing match. Sometimes you're getting punched, you got to defend and don't get knocked out, right? Once you get your feet again, you can start throwing punches, right? It's the same way that if you punch and you're starting to win, you can get more aggressive, okay? So use this as a very simple approach of which tokens do I choose. So if I go into the lead here, I start with Bitcoin, I make some money. Now I can trade ETH and Solana, major alts, right? Then I go up. Now I can start trading some gaming tokens and move my way up. right? So I set myself these rules, and these rules are when I get to a certain amount, I can then get a little bit more aggressive. And remember, at the same point, when you're creating a business, you're also taking money outside of your growth. So for example, if you get a trade and take 400 to 600, right? And you take out $100 for the day and you now have $500, yes, sure. Maybe you can dip your toes into a little bit more of a major alt the next trade. But the moment you come near your starting balance, or you're going to go into a negative, right? You need to jump to the safest asset. Now we jump onto pillar 5. Let's start building your business. Let's look at your daily tasks, your starting amount that you're looking for. How are you going to do this on a daily basis? So the first one that I want to show you guys is, for me, the sweet spot is $400, right? $400 for me is a good starting amount. The reason being is because you can get good size out of this using leverage, okay? But you don't have to be super aggressive. So if we do a simple calculation, you can do any amount that you're looking to start with. Some people don't have $400, some are more than $400, right? You can decide. But when it comes to $400, I look at a simple method here and I say, okay, $400 times 10 gives me $4,000 position size. And if I look at $4,000 position size, I say, okay, how much out of $4,000 is $250? And what that equals to is around 2.5%, which means that if I want to trade $400 on a 10x, right, that will give me 4,000 position. I need 2.5% move on the chart on a daily basis. Okay, so if I look at this now and I say, okay, so that's on a 10x. Let's look what $400, right, on a 20x equals. The reason I put all of this out there is for me to really understand all of my options, right? So here is now $8,000, which means I just changed this quickly. I had a 250, it's 100. So if I have $400 on a 10x, 4,000 position size, I need to make $100, that's 2.5% on the chart. If I have $400 on a 20x, that gives me $8,000 position size. If I want to make $100 a day, that then equals to 1.25% that I need on the chart. And now let's just go down the list a little bit. So now we jump to the next one and I use the 50x. And I say, okay, $400 on a 50x give me $20,000 equals $100 a day is 0.5%. Now off of this information, right, you can now look and say, okay, which one do I want? Now again, this one at 0.5, that's a scalping strategy. It means you've got to have a little bit more time to stare at the charts, right? If you're choosing this one, you could be trading one trade for a longer period of the day, right? So something where you can sit and allow the trade to play out over a few hours. You don't have much time to stare, even though a strategy of making money a day does consist of you actually paying some time on the charts, really fighting through. But the key here is not to have too many trades, right? The key here is to actually get one successful trade, sometimes one or two stops, and then a successful trade. But the key here is to time the trades better than just trading all the time. But here are now your options. So now if I go back over here and I say, okay, what was this trade? So again, this trade stopped out now and I took my little loss, right? But just to show you guys now, this trade as an example offered me the 0.5%, which means of my $400, I'd have to enter on a 50x, right? Again, I have a $20 per trade cost, right? Remember, this trade didn't have 5 checklists. This was only 2 checklists. This is why you have to have 5 steps, which are very important. Okay, but nonetheless, now I know, okay, so on a daily basis, I need to trade on a 50x. I'm looking for 0.5% and I'm risking $20 as my cost per trade. If I'm starting from the beginning, I'm trading Bitcoin only. If I'm ahead, right, then I can trade altcoins, right? Through this information, you can start building yourself a full plan. Now you know the size that you need. Now you know the percentage that you need. And now you have a cost per trade, as well as knowing what token to start with. Now, the last important part to add to this is the time frames. If you are looking at a token, you're looking at a specific time frame. So 15 minutes to 5-minute time frame gives you analysis for 2 hours or so. If you want to find a trade and you can see a 0.5% trade in these time frames, then this is 2 hours you can get to your trade, right? If you have a little bit of a busier day, the 1 hour can give you anywhere up to 12 hours to 24 hours for a trade. So these are the time frames that I use very much specifically when it comes to a day strategy. Now we get to the 6th and the final pillar, is putting it all together. Setting yourself up a daily routine. You say, okay, on my chart, I'm going to set alarms when my 15 minutes and 1 hour RSIs get to the bottom or the top, so that I know that a long or short is ready. I'm not going to chase the market. I'm going to set these alerts in. Then you know your size, you know what token you're looking to track, you're looking for your checklist to play out, and every day you have your checklist of what you need to do to execute. Now, what's very important to add to this is a rule system. If you take a loss, you get a cost per trade loss, $20. You have to take a break, or the next trade has to be 5 out of 5 checklist. The key here is not to get into multiple losses. The key here is to take a loss, take a a breather, neutralize your emotions, and then come back into it. So adding yourself a rule system is super important. So guys, if you enjoyed the video, smash up the like, subscribe to the channel, comment below what you learned about this video in specific. Any other tutorials you want me to do, let me know. Remember, if you don't have a Bybit account, link below in the description that you can sign up on. And guys, just take it day by day. One thing I've learned on this journey is the strategy and building that section is what works the best. Every day trying new things and kind of confusing yourself doesn't work. If you know you want to make $100 a day, build the system, know that there's tools, keep working on the system. Simplify it, right? And just use these key pillars that I've given to you guys. Thank you for watching. Lots of love. Bye-bye.